Thursday, March 23, market analysis. Stan Ehrlich, good morning. 10:17 California time, a little bit past the middle of the trading day. All of this is live, of course, real-time quotes in the upper left-hand side of your screen, and typically in the upper left-hand corner of each individual chart is the net change for the day. On the left, you've got the S&P 500. I always start with the stock market indexes, and no difference this morning, and typically with the spider. This is a 15-minute chart, as you can see here. We're up 360-ish momentarily. Now, yesterday we had a bearish engulfing. Normally that's a bearish daily price action signal, a Japanese candlestick. What frequently happens with these candlesticks is that you get a move back into the range of the candlestick within a short number of days. This is the next day today. And we did get a rally well up into the range of yesterday's bearish candlestick. At the moment, we are coming close to the low of the day so far, which is only a little below the middle of yesterday's range. In order for that candlestick bearish signal to work, and I really don't want it to work, but if it does, you're going to see new lows for the day. You're going to see it start to get closer to yesterday's low, and you're going to see it close below yesterday's low. That would be bearish. And it would probably, very possibly, start pushing prices down much closer to the low that we saw on the right chart here for March 13th. That is the same low that I'll bring into view on the left. This low here, which is around 380.50. And we're now 95.80. So that's a 15-point, pretty sizable decline. We're still in an area of resistance that we poked at yesterday's high, starting the bearish engulfing, and didn't get above it, of course, this morning. So I'm a little concerned, except what do I have on my side? We weren't overbought on the rally yesterday, so I don't have any bearish official sell signals, only the bearish engulfing. We have a trend up from the early part of March for the last couple of weeks that hasn't been broken. We have a support area a little bit below us. We have had higher highs for the last couple of weeks, and again, not getting high enough on daily data to get overbought. So I basically like what I see, and this could be a buying opportunity on this dip right now. A few minutes ago, 395.5, already 610. So what I want is for somewhere in this area above yesterday's low for the S&P to hold and start to go back up and start to make new highs and start to get above yesterday's high and close above yesterday's high would kill the effects of the bearish engulfing we had yesterday, if they start to follow through in the first place, and so far they have not. We only opened significantly higher, rallied a little more, and then came back down toward the lows this morning. That's where we're at right now. So you know the story here. I think the October 13th low, which was it was at 11 out of 10. Bullish reversal, green ER buy signal with every classic feature to it that I could imagine, and I talked about it before it happened, during its happening, and after it happened. So the October 13th low is a whopper. It's the bottom of the bear market from the previous year, and so far the lowest low by far and away for the last 6 months. October, November, December, January, February. Yeah, that's right, 6 months. Good. Now, that's significantly in our favor, since all of the lows have been higher on the average and the highs have been higher on the average since then. That defines an uptrend. Okay, the DIA has a similar but not the same situation. Daily chart on the DIA. The large head and shoulder bottom formation that I thought we were forming December and January has failed, but it hasn't turned into a bear market. Support areas are holding. Oversold conditions worked. We started to rally pretty good. It's just that the DIA is lagging behind quite a bit and not making upside progress anywhere near as much as, say, the QQQ. Remember, the DIA is the very, very old, well-financed Dow Jones Industrial 30, only 30 stocks. So they don't need to and have the ability to survive interest rate changes better than, say, the QQQ, which is high-tech and newer companies, and they need to borrow money a little bit more aggressively and a little bit more often, et cetera, than the DIA stocks, which again are only 30, not a very big sampling. Well, the Qs, I don't remember how many are in the Qs, but a heck of a lot more than a few hundred. So we'll get to the Qs in a moment. I'm not surprised as interest rates begin to flatten out after going up so much, so fast, so quick. In the next several months, and I think the word a few to several is at least appropriate, maybe at the end of this year, we will be convinced that the market, that interest rates have topped and will start going down, maybe slowly, over the next many months after that into 2024. We'll see this market much higher by then, but that hasn't happened yet. Then the Dow will have caught up and made new highs for many, many months, et cetera, et cetera. So I like the way the Dow Jones is acting. It just simply needs to get into this trading range and start to chew through it on the upside. By then, we'll see much higher levels in the Qs and probably significantly higher levels in this S&P, which is caught in the middle. Let's go look at the leader here lately, which is the QQQ. Whoops, I'll get that later. Minimize that, and doggone it, here we go. Qs, daily data chart. It did have the head and shoulder bottom formation. It did not violate any rules. It is working correctly, and you should be watching the QQQs from the standpoint of the head and shoulder bottom formation for months to come. The minimum upside objective is for 347.11-ish, and that is a minimum. I've seen head and shoulder bottom and top formations that went 200, 300%, even more past their minimums, which I fully expect with this particular situation. So your original breakout took place approximately January 23, if not exactly on that date. And that is where the marker is for the minimum upside objective to be measured from. So we got overbought on the rally. Everything pulled back down again for a few weeks. We bottomed out on March 13th with almost, well, actually it was a bullish engulfing, but it wasn't an official ER buy signal because it didn't get oversold and it came so close. I almost got a green bar, but not quite. Would have been nice like October 13th. Okay, and bearish red, the exact opposite, upside down on August 16th, the top of the rally. This is why I have developed this trading system, ER signals, for short-term, intermediate, and long-term major top and bottom buy signals to the day they occur. Don't trust me. Just look at the green and red bars over time, and you'll find many of them at whopping important tops, like way back at the top of the chart here on the QQQs. Ladies and gentlemen, that was the high, the beginning of the bear market of 2022. ER, bearish engulfing on the QQQs, November 22nd of 21. All right, so I see we're slipping a little bit more at the moment on the indexes. I'm going to go back. I minimize that one at all. I wonder if I'm having a problem with TradeStation at the moment. But anyway, yeah, I hope it doesn't persist. We are low and last on the indexes. probably all of them, and coming down, still 270 higher, not very much higher on the day. The DIA is only 1 1/3 higher, and the Qs are up 5 almost. There's your example right there of how the Qs have held up, gone up faster, quicker, new highs for a longer period of time. Hey, let's go to the futures. Okay, do I have any new signals at this moment today? And I'm scanning through my particular symbols that I'm tracking, and the answer is no, but I'm going to point out some very important features here. Remember, we got on the bond futures, the interest rate futures, this is the 30-year long bond, right up against resistance, the red bar, which had been established starting back in December, tested in early January, and looks like extreme early February. That's 3 times the market's been in that little range around 133 plus, not quite 34. And we stopped there again last week, beginning of this week. And I'm expecting it to pull back down modestly, maybe a little bit more. But here's the thing. In a general sense, any downside break, 128, maybe even down to 123.24, should end up creating a low, a turning point back up. And very soon, I'm thinking of the next few weeks, a month or 2, or maybe even 3, we're going to start seeing closing prices above 133, 134, and 35, 36, and up we go. So I think we're building a long-term bottom formation in the interest rate futures. I like the way it's developing over time. I hope I can pick the day the market turns and begins to move up for the bullish breakout. That would be having a bullish green ER buy signal, which is what we had back here. Back here at the bottom of that break, exactly. We had a bearish one smack dab at the top of that beginning of that bear move, almost at the top of that one. So a lot of these signals are the turning day for a decent, if not good, if not great, if not incredible long-term or short-term move. All I need is green and red on my daily to talk about the beginning of a move. Next chart. We've got the heating oil. Wait. That was bonds. Did I pass 10-year notes? I'll get to them. I guess they're out of order. So this is heating oil. Got oversold, came up to resistance. I'm expecting it to turn down. I'm neutral to bearish, basically bearish. You break the second lower green support line I've drawn, and you're probably going to crash into new lows for many months. That would be a very significant long-term breakout. I got a sell signal smack dab on top of this market January 24th, and I knew I talked to you about that at the time. 2 days later, we had another one. And look where we are now. 2 days shy of the very top of the market. I got another one back in November, and way back here in June, which is before I started doing these YouTubes in August, I believe, we had one at the very top of the market. The high day, until finally it just barely made a new high way back later in November. This is a big sideways, big sideways trading range, ready to break out bullishly or bearishly, and I think it's going to be bearish. I hope it's bearish. Heating oil. Next chart. Natural gas is already on its way down for quite a while, and we got a buy signal at the bottom of that break. It lasted a couple of weeks, and now we are toying with breaking that support. If you start closing below this little blue line, which is basically 2.09, you're probably going to drop off very quickly and very sharply, substantially, continuing a bear trend. And remember, the last part of bear markets is frequently a very sharp, big breakdown, exhaustion weakness, we call it. So we haven't gotten any of that yet. So this next move down may develop something like that. After all, it is getting pretty cheap. And we are new lows for, look at this, years. I'm going back to 5 years ago at the moment. That is pretty darn cheap for natural gas. Thank goodness. Next. I got a buy signal a couple of days ago that did not work in soybean oil, and we are stopped out 2 days later. Luckily, and that was around 56 or even a little higher, depending upon how you used my strategy trading system. But this is obviously new lows by a long shot and getting oversold. Now, I like very much the oversold conditions for watching for reasons to be a buyer. We have come down to today's lows to 51.25. Look to the left, all the way over here, back in July. Yep, the market bottomed out exactly at the, well, almost exactly at the same levels, with multiple tests of this time or price range, and even a little bit of evidence that it was support way back over a year ago, February 9th of 22. This is a significant support area, and I am expecting it to start to turn back up. This morning, we are a little bit now higher than the low of the day. We're not low and last exactly, and it could be it. We could have done it this morning. It did come down a heck of a lot in 2, 3, 4 days, actually, dropping quite a bit. That's from the high of my bad buy signal of 58.36 all the way down to 51.25 in 4 days. Yep, that's a lot in a very short period of time. No wonder it got oversold. Not only that, the degree of which it got oversold down to 17-ish, 16-ish is equal to the oversold levels that we saw the last time we got a bullish engulfing. I'm going to be a little more adamant about my commentary here. I think today has a high degree, a high probability of being a low of some modest significance. Remember, the trend is down. So what can you expect for a rally? Well, back up to 55, maybe 56, maybe a hair below 55, 54, 80, 90. But hey, if you're an intermediate or short-term trader, scalper, swing trader, that is great for you. I would not necessarily expect farming or soybean oil, which this is, processing company, to buy, hedge, for example, at this point. I'm still bearish longer term. Next chart. Soybeans. Essentially same comment all the way across the board, minor changes. Next. Same thing with live hogs, and I'm going to go with the S&P 500 E-mini. We did come into support. We did bottom out on March 13th in oversold territory, and we are trying to make it higher than yesterday's high on a closing basis. That would kill the bearish engulfing effects, which at the moment aren't working anyway. We have an inside trading range day, and the stronger it gets, the faster, the better I like it. I don't want it to make lower lows, and I'm going to have to start talking about bearish commentary if these lows in the last day or 2 or 3 don't hold. 4, maybe 4 days. Next, wheat. Possible double bottom, oversold twice at these same levels, give or take a very small difference. And I would be looking at wheat rallying up to 730 approximately a second time, but the trend is down. That would be a good area to consider selling short. Pardon my cough. And that's it for wheat. OJ, pennant formation, been talking about it for a few weeks now. Wait for the breakout. Usually up in an uptrend for a pennant. Cattle, oversold, probably going to bounce a little bit more. So sugar, no comment. Passing on high-grade copper, overbought on cocoa, so probably going to top out and have a move down of minor consequence. Remember, the trend is definitely up so far. No major sell signals. Not that I always get a bearish red on the top of the market. I just do often enough. That's a very good downside correction. There's a pretty good minor downside correction. Do I have one in cocoa long term? I don't see one. Okay, way back here, there's a red one. It lasted about 2 or 3 months. Unfortunately, all I've got is overbought at the tops, which is very, very common. Almost 90% likely to produce a big turn. So, at the moment, overbought. Next chart. 10-year notes. I knew I'd find it. Still, like bonds, long-term bottom forming. I need to close above that little blue line at 116.24 in order to have a major bullish breakout. And that would be intermediate to long-term bullish, months and months to come, probably. Next, gold, silver, and platinum. We caught the bottom in all three of these precious metal markets in the last month. We have a green bullish engulfing ER buy signal on February 28th. What can I say? The low is the low, and we got it. Next. Same damn comment for the platinum market. The low was on February 27th. Green bullish engulfing, all the criteria necessary to do the job. We need to make new highs again. We've just done that or challenged it very closely the last few days. Next, I'm bullish on precious metals, obviously. We have a new high for the move up in silver, and we got the exact low day with a bullish engulfing. You can't get any closer than the low day for a buy signal if you're looking at daily data. Period. All three of them, bullish engulfings on the bottom. Silver has made the new highs. The others are about to, I think. It's overbought, unfortunately, so we're just barely overbought. But that does imply, especially now that we're back into resistance, like I mentioned earlier, there's a good possibility it's going to have a little downside correction, and that implies gold and platinum might also have a little downside correction that won't cancel out the bullish trend or the bullish move necessarily. It could. But the longer term trend is up here. And for going backward here, platinum, it's the same thing. It really bottomed out last fall. Next, going back to gold, it bottomed out last September, October. Yeah, the trend is long-term up, going forward, and going to the next chart of corn. Corn broke down below support, got oversold, bounced back into a little resistance, broke down again to new lows for the trend. Recently, the beginning of the month, March 10th, got oversold, so it deserves a bounce. It did bounce. Today's high is a new high since then, but we are trading it right around unchanged, and that's not particularly good for a bull trend. It's not a sell signal. There's no follow through, and look how many times we've closed right here at 633, give or take a squeak. Even if it went down, it came back up and stopped there. If it went up, it came back down and stopped there at the close. So that could be a very good clue. It's going to close significantly higher or lower than 633 the next day or two or three. It's definitely going to happen soon. Next chart. Crude oil at resistance in the red bar. Going to turn down, I believe, very soon. We have a higher high today, minor, not oversold anymore. And now we could easily get down below 65, 64 again and continue this bear trend. Next. Same thing on the bonds, and we've looked at bonds. We've already talked about the interest rate futures, so I'm going to go to forex real quick here. Only three of them I'm interested in at the moment. The euro dollar is overbought, challenging previous rally highs. The trend is up in the euro. I would wait for a minor downside correction, 107-ish, and consider being a buyer in that ballpark, especially if you got some technical reason with disciplines, money management disciplines, to potentially get long in that ballpark area. The dollar index is exactly the opposite. It's oversold. I'd look for a little rally to go short. And lastly, the dollar, Japanese yen. We had a very adequate new short sell signal on March 15th. Today is just a tiny bit lower low, lowest low since our sell signal, and it appears to be a probable new low close since our sell signal. What can I say? It's on its way, and that rhymed. Next, a few sectors. Interesting about the banking sectors. Our previous buy signal today got violated, but we did have a profit for a few days and plenty of room to take a small swing trade profit lasting 1 to 3 days. Yesterday, everybody could have been out. today, officially, we're now below the previous buy signal low. And so that buy signal worked a tiny bit, and now it's a moot point. What do we got? Support? Yes. Possible bottom building? Yes. Enough evidence to say it is a bottom? No. I need to see it start to close above today's high. In fact, the best buy signal, intermediate to longer term, would be above the green buy signal, above the high of the day on March 16th. Next chart. Again, banking industry. We did and still do have a buy signal at the lowest low. Not working really well. Probably got stopped out yesterday of any longs. Would you want to buy it back? Maybe. Again, at a minimum, getting above yesterday's high, and probably above the high of March 16th at 32.39-ish, 32.35, is the trigger for this bottom, if it is a bottom. And I'm not saying so far, past tense, but I think it could be. I think it should be. I think it is working on it, developing it. Let's find out over time. XME is the next one. Just got oversold in a nice rally. That was very decent. OIH, we had a false buy signal. Didn't work at all. Took a small loss. But it did get oversold a few days ago, start to rally up, have a gap. Gap is closed. Now we need to hold. No lower than the lowest lows, period. Somewhere in here, it looks like it's trying to bottom out. This is the oil sector. Don't have a lot of faith in this because the trend is down and we've made new lows since October. So the trend is bad, and we're now challenging a previous oversold, and that's not good enough to hold a market. So we're possibly going to make new lows on this one. Next chart is XLB. Bear signal a couple of weeks ago, working great, still basically working, looking for a test of the last oversold condition and probably new lows. Next, XRT. Buy signal just barely so far this morning passed the test and did not get below the low of 3 days ago, which was the bullish engulfing. So what have we got? A really, really low risk buying opportunity with no particular evidence you're going to make money yet. All I know is the stop should be really close. And if you buy it here, you're not going to get hurt much. If you buy it here and it does do what it could do, and that is hold support and start to rally more, then you get bragging rights and you bought it almost at the low of the whole damn move. But that's how it's done. A little bit of gutsy. XLK, overbought, couldn't get above the overbought high of yesterday. Probably stalling out a little, but the trend is up. I like it. I'm looking for higher levels soon, but there's a so-so chance of a minor dip here. And I'm going to leave you with this last one, XLV. We bought the bottom of the break with a bullish engulfing green. The retracement is just classic as hell. And yesterday was the highest high since then. Today we have an inside day in the bottom range of yesterday, but no lower than yesterday's low, which was basically the close. So momentarily we're slightly higher on the day, but that's not very good. We're at the low of today. I don't know, this looks okay, but it, for a lot of people, would look like it's about to tank. To me, that is true, except I'd be watching this very closely to see if it starts to get above the opening and above the high of today in the next day or two. That would be friendly, if not flat out bullish, because support levels at slightly higher, slightly higher, slightly higher, slightly higher are holding. That's it. You have a great trading day. Appreciate it. Stay in early. Talk to you tomorrow.